Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and it is 5 a.m. September the 17th. Let's get to the day's events. Last night, I did what would have been Thursday night stock charts live because I will be traveling tonight. So, no Thursday night stock charts live. We did it last night. There's a replay, and I will link to it. If you're interested, you drop a link in the box. And what I want to talk about today are correlations and what we're seeing in the market. We touched upon this last night. I did it in greater detail. I don't have the time to do a deeper dive into the correlations, meaning sector rotation and what's driving the market at current. But I will drop the link in. And at your leisure, take a look at it, and there you go. That's from last night. Spent a lot of time on it. Okay, let's go to a chart that I put up. What's driving the market at current? This is a monthly chart. In candlestick, you have the S&P 500, as noted here. In green, you have the overlay of the U.S. dollar. Hey, Sam, how you doing, buddy? And the dollar, which has been trading by and large with the S&P 500, that convergence, that traditional correlation is done. It's over, at least for the short term, because the S&P 500, beginning back here in, what was this, March, the dollar rolled over and the stock market caught a bid. And now every time the dollar catches a bid, of late, you're seeing the stock market fade. Sam, always on the house market right now. How about you? Everything all right? Everything's good, Sam. Thank you very much. Hope everything's great with your family and all your trading is going well, and most importantly, health-wise. How's it been in Italy in terms of COVID? You seeing spikes? Is it old news? What's the feel there? I remember back in the gloomy days, you guys were in turmoil. Going on to a weekly chart, you could see U.S. dollar flatlined, stock market rally. This is a correlation here. There's complete and utter inverse correlation, like 95% of the times. While the dollar is down, the stock market is up. And you can see overlaid here is price action relative to. It's kind of a better illustration. And if you want to know why we're fading these past several days, look no further than a bid on the U.S. dollar. So as we proceed into the new trading day, we're seeing some weakness in the markets. We're coming off the lows, but we're also coming off the highs of the U.S. dollar. Let's take a look at it. So here's the dollar. We had broken out above this resistance level, or what I like to call a tripwire. It's basically a resistance level within a trading channel. We broke out. Sure enough, we blasted through the upper band. This is a 4-hour chart. These will all be 4-hour charts. We blasted through the primary upper band of resistance. Then we failed, which is good, because that bodes well for stocks. And in a moment, we're going to take a look at the S&P 500. It was weak earlier, with the NASDAQ 100 much weaker. But this 4-hour bar is now in the books. This is a bull trap, breakout point failure, what have you. We do not have a new hourly low, 4-hour bar low yet. We'd like to see that. RSI is still looking strong. So while a lot of technical damage has been done here, the dollar's not out quite yet. Let's take a look at the S&P 500, see if it's bounced back. And it did. See this? Remember, these are 4-hour charts. The dollar has a red candle. What did we do? Long green candle. No breakout yet. Do you see the inverse correlation? To understand this market, to trade it properly, you need to understand what is driving the market. And right now, at current, could change tomorrow, but at current, it is the U.S. dollar, and the S&P 500 is trading inversely of it. Let's take a look at the other inverse correlations. Gold getting slapped. I was worried about this. But ultimately, I don't believe that the Treasury, the Federal Reserve, is going to allow the U.S. dollar to rally because they need to inflate their way out of this debt bubble. The only way to do that, because we're not paying it back, the only way to do that is to allow the dollar to decrease in value. Let's take a look at silver. Silver is still very, very strong here. I mean, yeah, we're down 1.75% on the session, but you know the price action here is ominous. If you're not familiar with the volatility of silver and you're not appreciative of the amount of debt that's out there, national debt, then you'll appreciate the value of this consolidation, because it looks like a monster ready to ravage very soon. So we're going to be looking to add more to silver on a breakout. This is just a resting spot for a continuation breakout on silver. Loving this setup. Let's take a look at nat gas. ARL, good morning. Sam, Bob, do you think with all of this printing, the market can hold? At some point, the Fed has to do something with inflation. They need so the Fed doesn't. The Fed says they want inflation, and they do to a certain extent. What they are concerned about is hyperinflation. They don't want inflation trading above 2.5%, 3%, because then our payments to support the debt becomes it's if we were ever try to normalize the yield on the 10-year yield or across the board in the debt markets, our interest only payments on that debt would be equivalent to our defense budget, which is over $600 billion a year. That's interest only. Forget about principal. So that's truly the black hole of the apocalypse for the Federal Reserve. What they're trying to do is thread a needle and try to inflate away that debt with low yields. The problem is that they're targeting, I had a chart up yesterday. Let me see if I can find it. That there's a chart up on Zero Hedge. Where is it? About the dot plots. Yeah, I don't want to keep everybody here. I'm trying to find this. Embarrassing, Bob. Good morning, WG Shocker. Good morning, sir. Yeah, I can't. God damn it, I'm in here all the time, too. This is it. So, this is actually funny because this is a dot plot. Each dot represents an opinion by each Fed governor of where they believe interest rates should be. So you can see that everybody's flatlined for the most part. You have a few up here, and this is all just cartoons and fairy tales and pixie dust having rates up as high as 1.5%. For the most part, the consensus is down here at just above zero. In real terms, zero. So going out to beyond 2023, they see, and keep in mind, just shy of 1.5% goes out to 2023. Beyond that, this isn't even normalized. And they have above, the low is at 2%, a high is at 3%. The consensus is 2.5%. No, that's not going to happen anytime soon. Unless, of course, inflation steps in. And then you're right. You're going to see a stock market crash like you've never seen before. Why? It's because in 2018, when you had the Federal Reserve on autopilot, back was 2018. Right here. Oh, we're on autopilot. We're gonna let our balance sheet gradually diminish, and yields were rising at the time. You can see that the dollar was really strong at the time because of that. All of a sudden, you had yields hit a little over 2%. Stock market crippled, rolled over, and that's when he found Jesus. He went to church. He did a couple of Hail Marys, went back to the Fed, and then modified his statements very, very quickly. And here we are today with a balance sheet that's completely gone through the roof. So anybody who's thinking that we're going up here to 3%, 2.5% anytime soon is sorely mistaken. Now, if inflation runs rampant, then they'll have no other choice. But they are going to be willing to ignore inflation for as long as possible so that they don't have to fight it. That's why they choose to ignore the CPI, Consumer Price Index. There's two pieces of the CPI. The core, which takes out food and energy, and then there's the all-in number, the CPI. At times, traditionally, they'll say, we want to use the core CPI because that takes out food and energy because it's volatile. Unless, of course, it suits them. And it comes in less hot than the overall number. And they'll say, no, you know what? We're including food and energy because whatever their excuse of the day is. They're going to ignore inflation for as long as possible to allow inflation to run hot, and we are going to pay for it. So if anybody wants to know why you're seeing silver trade like a monster, a tight consolidation, you know why. They are going to let inflation run hot. Gold, maybe down at current, Still, we broke out several days ago. It's under pressure, admittedly, but do I want to be long of the gold stocks? You're darn right, and we have a lot of them. Bitcoin. Bitcoin's running hot because inflation's running hot. So this is the market that we live in. So they're never, ever going to freely jack up rates because they know it's going to happen to the stock market. It's only when a carton of eggs goes to $3, $4, and wage growth is not keeping up, because that's inflationary as well. That's when the rubber hits the road and they can't deny inflation anymore. Dollar's catching a bid now. It's up. Look at that rebound. Damn. Somebody must be looking at the CPI numbers going out to 2023. Here in Italy, there is a disease to buy houses when inflation goes up. A disease? Is that accurate, using the word disease? I could see buying real estate. Let's do some chart requests. What's Rocket Mortgage doing? Goddamn stock is hurting me. All right, Sam. This is the only position that's not working for me. RL, I saw that last night. You and Nestor had symbols I didn't get to, so I will do GRVY for you. I saw that after I logged off last night, and I was like, darn. And I even tried to go back and figure out what symbol he had requested, and I can't get back into the chat area. So, Nestor, if you're watching, please send me that symbol again. My apologies, and RL will do GRVY. Nestor, if you're here now, drop it in the box, and I'll take a look at it for you. All right. Let's do some chart requests. I giggle every time I see this. What else do they have here really quick? I just want to go through this. Yeah, yields. We spoke about this last night. All the talking heads have been talking about yields going lower. I've been saying them going higher, and sure enough, they haven't followed through on the breakout of yet, but yields have been pressing higher. Here's the Nasdaq to Russell 2000 performance. Nasdaq clearly, we went over this last night, clearly underperforming the Russell 2000. And for that matter, the cyclical names, airlines, etc. So let's get to chart requests. Oh, that's me. Wrong link. There we go, Bob. First cup of coffee. See, I even had this up after hours last night, RL. All right. GRV, gravity. I keep thinking gravy. Gravity. Thanksgiving's coming up. That's why, I guess. All right. Monthly chart. For those new, we use multi-time frame analysis here. We want to identify where a stock has been to identify where it might be going. We do not begin with intraday charts or daily charts. We take a step back, breathe, take a moment, digest the chart, which is what I'm doing right now. And let's get to it. Beautiful chart. Extended relative to the third standard deviation Bollinger Band on a monthly basis. Pretty significant. The really good news here is that We're at all-time highs. No overhead supply above. Love that. Like, I can't put words to. Weekly chart. We have broken out above resistance level number 1. Here's the value of TrendSpider. 35% discount code below. TrendSpider, automated technical analysis. If you don't have it, you're missing the spell check on technical analysis and an arrow in your quiver when you're out there doing battle, because they're selling a lot of subscriptions, folks. I'm telling you, I talk to these guys, and if you're not equipped with all of this data at your fingertips, seasonality at your fingertips, going back 16 years since we're on here. September up 56%, drops off in October, November, rises in December. 16 years worth of data. So get TrendSpider, 35% discount code below. Use that link. All right. Weekly chart, powerful. A little bit of a fade, but not that bad. 2 trading days left to go. Clear blue skies, no resistance above. All right, so now we're tapping into the 3rd standard deviation Bollinger Band. That's always a red light to me. You know, consider it gravity defying. And eventually, it's like the Wile E. Coyote moment. You know, he runs off the cliff and he looks down. He's like, holy crap, I have no ground below. And he falls. So right now, you have a lot of traders taking it up, not appreciating the fact that relative to the 20-period moving average, that it is very, very extended on a daily and weekly basis, and it's due for a pullback. Not a crash, a pullback. So if we're looking for a setup here, I like 109.73. Where did we close yesterday? 129, doable. For an extreme pullback, 100.09. I want to know when it gets there. If it doesn't get there, I'm not interested in the trade. And this is how you using alerts is how you avoid losses. Not all losses, but I shouldn't say avoid losses. How you avoid impulse buying. All right. So, for a few folks joining in, if I could ask you to smash the like button, I'd really appreciate that. It helps me out with the YouTube algo. I'm not one of these guys that has fake money and rented Lamborghinis, and I don't get all the views that everybody else does. So, it helps me out. All right, so we already did seasonality. There's no analyst coverage here. It's very strange for stock that's been around. Unless TrendSpider is just not picking it up, but they're pretty good. It's been around for this long. We have data going back to 2005. It's shocking there's no coverage. Especially stock up in the triple digits. All right, so that's gravity. I mean, I like it. Just the froth has to come off. I mean, it's a beautiful chart. And you can see a little bit of trepidation in the last 4-hour bar. A little bit of a fade. But overall looking good. What else do we have? Snow. I don't know what this company does. I know it's all over the Twitter sphere. Snowflake. I think Buffett bought some. Oh, there's no data here. What am I going to do with this? I don't know what this company does. I'll do my best. I'm not a day trader. All right, let's make the assumption that we want to buy Snow. How could we have seasonality? Oh, seasonality for 16 days. That's the funniest thing. But why does it go back months? That's the funniest thing. All right, that's got to be a systems glitch. Yeah, now it's gone now. Okay. All right, so we broke out here and failed. The play here is a recapture of, wow, this thing's got a triple-digit handle. It's got to recapture 259 spot 43. There's not enough data here for me to render a real good opinion. If it continues downward, we're coming down here to 240 per share. But I mean, we're talking about a few days worth of data, so it's not even worth the conversation. Right now, it's weak, but there's not a tremendous amount of history here. It could pop up and easily blast through this resistance level. Jury's out. If you're looking for a price point to re-enter or to enter, 259 spot 43, stop loss right below. Like 240 as well, looking good. We'll see whether or not that holds. Keep in mind, this is only a 5-minute chart. And I never use a 5-minute chart to analyze a stock. All right, next up. I did Boeing last night. That was on, I don't want to redo that. I put the link in the chat box. Now, GameStop is one. As a matter of fact, I'm going to run a scan here in a moment because I don't have much to go over. Unless somebody else dropped another chart in the live stream. Oh, it's an IPO yesterday, cloud software. This is Snow. It IPO'd at 96, and it's already tripled, nearly tripled. Holy shit. I'm going to get blocked for saying that word. God damn it. All right. GameStop. We spoke about GameStop. Yeah, that's my point. They priced it at 96, but it's already at the mid twos. You got to wonder how much froth is in there, how much hype. Plus, having Buffett's name attached to it, the more I think about it, the more I'm wary about it. I would wait for more data to come out, unless, of course, if it recaptures those support levels and it truly catches a bid and moves on to new higher highs, then that's the market saying it may be for real. But I would stay small. All right, GameStop. Huge short interest. We went over this a couple of weeks ago, and the shorts are getting annihilated. At least yesterday they did. We have a breakout. My alert fired off here. I didn't trade this. God damn it. I should have. I balked. All right, so we have a breakout above resistance back here. Continuation breakout. If we close out the week above 8.52, it's a long. I think it's going higher. Why? Short squeeze. There's a huge amount of shorts in the name. Weekly chart. Watch for a retest of the breakout point. We're going to keep sensitivity very low. I think the last I looked, there was worth 10 days worth of short interest. Excuse me, 10 days to cover the shorts, not short interest. All right, so GMA looking good. Looking for a retest. There's more room to go here. I like the trade. Nice setup. What else do we have? GE? GE. I haven't looked at GE in I don't know how long. But maybe it's time. These names, these cyclical names are coming back to life. I mean, U.S. Steel is catching a bid. Look at the GE. Holy cow. Big move yesterday. Maybe it's time to look at GE. Look at this consolidation here. This is a company that's been thrown to the trash, and it's a perfect contrarian trade. I think this could be bought. Not aggressively. It's not going to the moon tomorrow. But this is one where I don't know if it yields anything anymore. Let's see if it does. They've had some real serious problems. That financial arm during the financial crisis almost destroyed them. It is yielding, not much though. Spot 6%. But look at this bullish reversal bar. What time frame is this? Monthly time frame. Look at this bullish reversal bar. Really nice on the month. Month's not over. Several days left to go. But really, really nice consolidation here. We bottomed out in May of 2020. Rallied, pulled back, no new lows. I think I'm buying me some GE for the longer term today. On the week, we have an outside reversal bar. Higher lows on RSI. I'm doing Facebook next, folks. I'm going to leave off with that if you want to stick around. We broke out on RSI this week. Watch for a pullback and a retest. We haven't broken out on price. Well, technically we have. This is what I would do with a tripwire. Let's call this a tripwire. All right, here's our primary upper band of resistance. Here's a secondary line of resistance, but let's call it a breakout. Above resistance, RSI's validating, Stokes hooking up. Daily chart, monster move yesterday. Watch for a pullback and a retest to this volume by price level here. They don't let me set an alert at it. Let's do this. Right here, I want to know. It was up 10%, 10.5% yesterday. Touch, bounce. GE, retest, daily support. Long. Can't believe I'm excited about GE. Seasonality. Again, for those folks just joining in, 35% off of TrendSpider. Use the link below. There's got to be more data than 16 years on GE. Let's go back, modify this. And there is. I like a lot of data. All right, October is not traditionally a strong month. However, November, December, very strong month seasonally. September, strong month. Let's see what the analyst is saying. I don't care what the analysts really have done. I care about how many sells and holds there are out there. We had a bunch of upgrades in the spring. Deutsche Bank reiterated a hold. Credit Suisse, hold. Those are potential headlines that are positive if they go to buy. Citigroup. They went to a buy. Good call. All right. So GE looking pretty good. Longer term. This is a recovery play. You know, you're not gonna load up your portfolio with GE. But if you're looking for something to tuck away, longer term, if you get a market correction, there's not a lot of selling left to be done here. So it's more of a place to, if you're looking for a place to hide your money in the stock market, it's the GEs of the world. The name's already beaten down, and there's not many sellers left. Let's go to Facebook. Not loving it. Already I'm not loving it. I'm not loving tech right now. Tech is in the woodshed. Inside month. Bearish key reversal thus far on the month. Weekly chart. I think at a bare minimum, I already have an alert set here. We're going to come back down and we're going to retest this support level on or around 258 per share. We have broken down to new lower lows on RSI. Daily chart, yesterday we flashed a bearish reversal bar. I think the path of least resistance has changed here. I think it's to the downside. Let's check out seasonality. $50 of the time. How many years we're going back? We have more data than this. Let's get more data. We don't have more data than that. All right, so 50% of the time, October, November, December, we're up. January is a very seasonally favorable month. So I think this is a one where we sell and go away and revisit in December, especially if we have a big sell-off in December, position for January. And the other thing I don't like about this, look at all the buys that you have here. You have one sell. That's HSBC. And you had a bunch of upgrades by Citigroup, Jefferies, UBS, and KeyBank within the past month or so. So I would be very, very careful because I view this as a lot of headline risk. These guys going to downgrades. So Facebook, I am not positive on for the next several months. And with that, folks, please smash the like button. Everybody have a profitable trading day, and I will talk to you soon. Be well.